Introduce and welcome Mr. Rajat Rajgarhia, Director Research with Motilal Oswal Securities. He also joins us live. Rajat, what a delight to have you back on ET Now. Thank you for joining us. Rajat, post Q4 numbers, have you upgraded your earning expectations for FY12 or have you downgraded them?
Hi, good morning. I think our earnings estimates post Q4 will see some marginal downgrades. And the quarter started with a big downgrade in the form of Infosys, and we saw some downgrades coming from likes of Reliance, etc. Bearing that, I mean the overall breadth of the numbers have been just about okay, but given the kind of interest rate rise that we have seen in the system in the last couple of months, that is going to be a key driver of downgrade for earnings for FY12. Some of the big numbers which create a lot of volatility in the estimates, like of Tata Motors, Tata Steel, etc., are yet to report. State Bank is reporting next week. So once some of these heavyweights complete their numbers for Q4, we'll get a reasonable assessment of what kind of trend changes we are seeing in the numbers, but it will be a marginal downgrade of somewhere around 1 to 2% at the aggregate level.
Rajat, what are you making up of the drawing participation that you're seeing? Because on every uptake, the volumes gradually are just lower and lower.
Well, it's almost 6 quarters now that you see the index just being in a range of, Nifty being in a range of 5,300 to 5,900. You know, this is almost the 6th quarter in a row where you have seen almost no return for the market. And as market stagnates, I think you will see participation drying up. This doesn't come as a surprise because typically the vulnerability of the markets to the global commodity prices have become quite high, and that in itself makes people quite clueless about how to trade this market. So till the time we don't see any particular direction setting in, I think we will see volumes being very lackluster for the markets.
All right, Rajat, you know, this one is coming your way. At Motilal Oswal Securities, as a house, you are bullish on PSU banking stocks. But given the kind of environment we are in, interest rates are moving up, NPAs are moving up, margins are coming down, does it make sense to buy them?
Well, these PSU banks' profits keeps on doubling every 3.5 to 4 years, which means that they compound at 20%. And this is the trend which has been for the last 12 years, where every 4 years profits have doubled. We think that the same thing is going to get repeated again over the next 3.5 to 4 years. But from a more near-term point of view, these banks are a lot more focused on protecting their margins, and yesterday's SBI's rate hike is a classic case of that. Growth, they are leaving it to the government and the regulator to manage. Whether the system grows at 20%, system grows at 15%, banks will grow in line with that. But they all want to protect their margins, and they will. Second, if you look at FY11, it was a very headwinded year on the P&L account because there was a lot of provisioning which was done not just on the NPL to move to a 70% coverage ratio, but also on various pension related expenses. FY12 you will see some of these things getting relieved. So despite assuming that the growth will slow down and margins will see some pressure, I think the reported profit numbers for all the PSU banks will look very good. You have dividend yields back between 3.5 to 4%, stocks at book or just about at book with 18-20% ROE. We think that these stocks have come at a prices where they can again deliver you a very, very strong return. Just a question of time. Maybe another 3 months they stay here, but this is the best time always to accumulate these PSU banks.
Rajat, what about the other rate sensitive lots, the likes of autos, which are not just sensitive to the rate cycle but also to the hike in commodity prices?
Well, in autos, I think at best you can be neutral or marginal underweight, and you have to play around with the stocks. Right now, last 2 years we saw significant outperformance for Bajaj Auto over Hero Honda. We think that from here on you just may see some outperformance for Hero Honda over Bajaj, because this keeps on swinging between the two stocks. Within the four-wheeler, M&M still looks like the preferred bet because you have least competition there. Margins are just about at the average of 13-14%. So in autos, you can be neutral to underweight and just own these two stocks, which is Mahindra and Hero Honda right now.